Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning as usual on July 28th. Overall, kind of steady as she goes here for the market. Things looked good overall. I will say, some of the stuff we talked about last week, we've been writing about here in the last few days, some of the stuff I mentioned a little bit on the webinar. In the near term, it does seem to be playing out. The major indexes are fine. We are seeing some under the surface, I don't want to say selling, but like selling on strength or some sloppiness. A couple stocks have gotten hit on earnings, things like that. I do think it's a little bit of a coin flip in the near term. Are we going to kind of get a quote real pullback, meaning a few percent in the indexes, or, chopping around? Are we going to see some leaders, break some intermediate term support, which kind of correlates with some sort of pullback, that sort of thing, or not? We'll see. I think it's a little bit of a coin flip. Right now, I'm not, pushing the envelope, selling some laggards, holding the cash for now, that sort of thing. Big picture, though, nothing's changed. The trends are very strong with the indexes. The vast majority of leading stocks look good. A lot of non-growth stuff looks very good. A lot of growth stuff looks good too, just kind of chilling out, or shaking the tree a little bit. We'll see how it goes on earnings. And of course, there's a lot of thrusts and studies and all that sort of thing. So, it's a little bit of more like how to handle it right now. To me, it's a little bit more of a stock by stock thing. Obviously, if you own 3 stocks that haven't been participating, then they get hit on earnings. It depends where you bought them and all that, but you probably want to be less high on those. Whereas if you have some tigers by the tail, obviously you want to hold on to at least most of your shares of your strong, profitable stocks. Okay. In Cabot Growth Investors model portfolio, we sold another name. Let's see, we sold 2 smaller positions this week. We're up to about 28% cash. Not eager to go higher than that. If anything, I wouldn't mind maybe jumping into something, either maybe a strong stock on a pullback towards support, or of course, if you do get some sort of new leader or re-emerging leader on earnings here in the next couple of weeks. Tons of earnings reports here in the next couple of weeks. So overall, I am bullish. I'm leaning bullish. I'm not looking to sell, especially strong names. But I'm also not, buying just because a stock had a one-day pullback or something like that. I'm looking for a little bit better entry points here in the near term. Okay, let's hop on the charts. As always, I'm using a program called MarketSmith. You can learn more at marketsmith.com. It's a product of Investors Business Daily. You can just see here with the NASDAQ, we had a big dip a couple weeks ago. Kind of held this 14,000 level. Tried to get going yesterday on Meta's earnings, Facebook, right, and reversed pretty hard. But then snap back today, okay? So it's kind of one of these things where it is choppy. I would say fewer stocks, not few, but fewer stocks, are plowing ahead right here than they were back here, sort of thing, which isn't unusual. Eventually some things just take a breather. Some things do get hit. A couple things have gotten hit on earnings, like Netflix and all that. So we'll see how it goes. But, big picture, it's hard. I'm not a short-term guy. I know a lot of these stocks move around a lot, and I'm not discounting that, but at the end of the day, it hasn't even touched, the NASDAQ hasn't even touched its 25-day line. Same thing, S&P 500. You can see it's been a little smoother here. There definitely has been some rotation into just a lot of other stuff, aerospace, even some metals, obviously commodities, transports. Just a lot of stuff looks pretty good here. So we'll see how it goes. But again, with a reversal yesterday, snapback, we're in pretty good shape. The broader indexes also look good. They've been a little bit, as they have the whole time, a little bit more, not touch and go, but stop and start, I guess I'd say, where you ramp. This is the IWM, and then you kind of go sideways, then you ramp. Now we're kind of, again, sort of chopping sideways a little bit. Same sort of thing, MDY, New York Composite. But again, I'm more of a trend guy. I'm pointing out the short-term stuff because it is earnings season. A lot of things have had some runs, and we're kind of in that time frame, 2.5 months, 3 months into the rally, where often, not always, often you will get some turbulence, and the market will pull back normally, but it might pull back a few percent, sort of thing after a huge run. So I'm just pointing it out. But net right now, the indexes are still, even, look at the IWM, which might be the weakest index, I guess, if you want to call it that. But the IWM is, well above its, even if it's 50-day moving average, So the intermediate term trend is up. The long-term trend is up. The number of stocks hitting new lows is small. There's some profit taking, I think it's fair to say, in some of these names that have had big runs, but very few have shown, real abnormal action. Okay. In the very near term, you are seeing so a little bit of selling on strength. You are seeing a little bit of a ramp here's the XLP, right? Ramped up a little bit. XLU, or actually XLV is a better example. XLU, a little bit more interest rate sensitive, but this is XLV, kind of, defensive healthcare sort of thing. So a little bit of strength there, a little bit of outperformance, but it's a bull market. It doesn't mean these things can't go up at all. Okay. The big thing, I think, in my webinar this week, it was kind of like, I'm very bullish looking out, weeks and months ahead sort of thing, that this could be, probably a new bull phase. You never know for sure. But I had a slide saying, where could I be wrong? Because you always want to look at both sides. And I would just say, listen, interest rates, this is the 10-year note. The 10-year note and the 5-year, a lot of this stuff, the highest rate we saw was in October of last year. That's when the indexes bottomed. I don't think it's a coincidence. Inflation, the Fed, so on and so forth. So obviously if the Fed goes bananas and just keeps hiking, that's going to be an issue. But I think one way you're going to see that is if you have market-based interest rates really break out on the upside. Now you can get, the one thing I would say is you can get higher rates kind of early in a bull move. It's not unusual because they might be discounting faster economic growth. It's not just inflation. But in this case, if we did break out on the upside here, I'm not saying, sell all your stocks. I would still key off what's going on with your names and the market and the primary indicators. But I do think, interest rates, you don't want to leave your brain at the door either. If they really did break out on the upside, 10-year note, 5-year note, whatever you want to watch, that would probably obviously be a headwind for stocks. So just something to keep an eye on. It did affect the market yesterday. We'll see if it's just sort of part of the market's normal digestion, okay? And the other thing is, it's fair to say we are seeing some, dents on earnings. So here's Netflix. Now, would I say Netflix is the biggest leader? No, it's kind of an older name. It's more of a turnaround, and it had a nice base here and a beautiful breakout, and it had a nice run, very nice run. But then it got really hit on earnings. It hasn't really, this is what I'm kind of seeing is, you're seeing some names gap down and get hurt among leadership, or some liquid names anyway. But even to this point, Netflix has kind of held the 50-day line. We'll see. Maybe it doesn't. But you wouldn't say that this is like dead for the next year. You can't conclude that anyway. ServiceNow, NOW, same sort of thing. Was it a mega leader? No. But like nice break, big liquid name, nice breakout, good numbers. Nice run here. And then it kind of reversed yesterday, got hit on earnings, but still above the 50-day line. So I'm seeing more of that where there's obviously yesterday was selling on strength, but some names getting hit, but not like completely melting down. Okay, Tesla was kind of another one. A huge run. This is a little bit different. It's kind of off its lows a little bit, but a huge run, got hit on earnings. Some more downside, a little sloppy, but you kind of stand back and you're like, this thing went from 170 to 300, and now it's at 265. That doesn't sound so bad. So we're seeing some of that where there's profit taking, things are getting hit. It doesn't feel good if you own it, sort of thing. And maybe they do break down. Maybe come in a couple of weeks and Tesla's really under the gun or whatever. But I'm just saying to this point, I'm seeing more selling start to pop up, profit taking, getting hit on earnings, but not like decisive, clear, destructive breakdowns among a bunch of leadership stocks. So what I'm trying to say is it kind of plays into the narrative of near term, there's some, landmines out there, but it's not like we're seeing the entire landscape get destroyed, okay? The last thing I want to talk about before I get to stocks, this is sort of, I'm not going to go into the whole thing. Go watch the webinar. I'm sure it's on there if you're a subscriber, that I did this week. Usually early in a bull phase you have, and I ripped off this from Mark Minervini, the term a lockout rally, which, there's nobody invested or you're invested in the wrong things, and there's just a vacuum of selling pressure. So every time the market pulls back for a day or two or a week, someone's there saying, yeah, I'll take 10,000 shares of this and 5,000 shares of that, right? Institutions. So that's why it's been hard, quote unquote, for the market to pull back. After the lockout phase ends, you usually get some sort of, like I said, first pullback. You might even break the 50-day line a little bit and then ramp. It's a very, very broad model. It's not an exact thing. There's no rule book to it. But I think that's just kind of what I'm looking at is, are we near the end of the lockout phase where we will get a pullback, which will lead to higher prices, but that sort of thing. So I'll update you week by week in the videos, and obviously if you're a paid subscriber in the issues. But so far I would just say if you're an intermediate to longer term player, hold your strong stuff. You always want to weed your garden a little bit. So if you have a couple weeds, things aren't breaking down, you bought something with high hopes and after 2 months you're flat and it's kind of looking iffy, you want to maybe, get out of that, force feed your winners, look for some new winners here. during earnings season. Okay, into individual stocks now. So there's some, it's a whole mix. A lot of these aren't going to be growth, some of them are, but it's kind of a risk reward thing. So this is Samsara. I've mentioned this before. IoT. I'm intrigued. Let's just put it that way. But it's got a little bit of proving to do. It had a huge earnings move way back here, and you can see it kind of led to this choppy thing. This was before the market really got going. Then it had this, I call it double skyscrapers, 2 massive volume weeks. And now it's kind of chopped sideways for 7 weeks into the 10-week line, 50-day line. It doesn't have earnings here for a month too. So, risk reward wise, if you wanted to, here in a tight, I'm not going to give you exact levels, or maybe you wait for it to rally a little bit, then go in and use whatever. You can figure out how to handle it. I'm just saying the overall pattern is this pullback was a little bit deeper, but it's kind of steadied itself in here. Growth has kind of gotten sloppy, and now it's at the 50-day line. So it's kind of like, intermediate term make or break anyway. So I thought that was a decent risk reward point. Palo Alto Networks is another one. Again, I kind of put this in sort of the ServiceNow thing. Is it the biggest leader out there in the market? No, but it it broke out of a nice long base here. It's got the sales, it's got the earnings, liquidity, yada yada, and it had a pretty good run. Very good run. Basically 200 to 260, call it. So 30%. Whoops, come on, MarketSmith. Okay, and 200 to 260. It got hit a couple of weeks ago on Microsoft was entering cybersecurity, whatever the news was. But it's bounced back and it's kind of tightened up. 250 has been a little bit of resistance in here, round number resistance. But again, the 50-day line's approaching. So you're getting some like risk-reward trades, as I call them, meaning like, is it the strongest thing? Is it whatever? No, but it's like, hasn't done anything wrong. And like, you could think about taking a position here. It's not like you have earnings in 2 days. And if it goes wrong, you have a reasonable loss, ideally, okay? Hopefully it doesn't go wrong. A couple other things. Chip stocks may be forming what's known as an ascending base. You IBD people know what that is. Kind of just basically 3 pullbacks after a sharp up move over a couple of months. And that's kind of what we've seen here. It's hard to see on the weekly chart. But like NVIDIA is kind of the same pattern, right? It had this huge gap, and you have kind of a pullback, new high, pullback, new high, pullback, new high. I don't know. We'll see. I mean, maybe the stock reverses here or whatever, but I'm just pointing that out. Chip stocks kind of spent a few, really 8 or 9 weeks kind of making progress, but choppily, so to speak. Let's see if they can let loose on the upside. There are some chip equipment names doing pretty well, okay? On the commodity front, I continue to like, the drillers look good. I mentioned, Noble looks good. This is Transocean. It's a low price stock, which I know some people love. I don't really care for it, but I don't care for low price stocks, not for Transocean. Transocean, though, looks good. It's a big company. It's, just whatever. It came out of I don't know if it's chapter 11 or whatever, but nice breakout here, signing big deals. So I still think the drillers look pretty good. FTI, this is another kind of more just oil service in general. Again, one of these, big reversals selling on strength over here, but hasn't even touched its 25-day line. It still looks totally fine. And then like even in the Explorer space, it's definitely more selective there, but this is a smaller one, Northern Oil and Gas. They're like a non-operator oil company, not to get in the weeds. But you can see like even here with oil, whatever, oil's still 75, 80 bucks, maybe something like that. You can see this thing's kind of approaching, or if not, sort of nosing out to new all-time highs today. So just kind of flagging that. I still like that. And just elsewhere in the oil space, I'm not crazy about oils. I'm just pointing out AMLP, so some of the pipelines too. So it seems to be a little bit of a group move here. We'll see how long it lasts. Obviously, commodity stocks can be tricky, but kind of an interesting group move going on. Bull market stocks, Apollo, I wrote up in Cabot Growth Investor last night, is one of them. This is probably the strongest looking one. APO, alternative asset manager sort of thing, kind of up near all-time highs here, ahead of the market and ahead of most peers. T. Rowe Price is kind of coming off the bottom. It's not going to be your most exciting name, but obviously a mutual fund company. But bear markets, not good for business. Asset fees, when the assets go down, you're getting 1% of less than less and less money. But you can see it's been bottoming out here for a while, and as the market kind of rotates, you're seeing some of these things go up. I'm not saying the stock's going to double, but it looks pretty good. Boeing, I've mentioned this 100 times. It had this kind of double bottom and then a run, and they said, hey, this year we're going to make good cash flow and earnings. Well, the earnings don't look so good this year, but the cash flow is going to be there, which is probably more important. And you can just see the stock's been almost intriguingly dead, dead money, just very, very, very tight. Like, tried to break out a couple times. Now this week, finally on earnings, it looks like the real deal. We'll see how it goes. But Boeing obviously looks pretty good. I keep bringing this up. This is one I take off my list literally probably 5 times in the past few months. And then like a week or two later, I'm like, well, maybe just put it on the list just to watch it. This is Las Vegas Sands. It hasn't done anything wrong. These things were like kind of leaders coming off the October low. And then it's just kind of gone straight sideways here. And it's kind of like Boeing. You're sort of looking for some sort of, okay, we're ready to get going signal. Because you'd have to believe that, China reopening, cash flow, the whole thing is the future's bright, basically. So we'll see how it goes. Maybe it doesn't work, but I keep a distant eye on it if it can really gain a head of steam, okay? Cruise ships, I know it's not revolutionary product, but Royal Caribbean, whatever, looks great. Really just a straight up move here. Had this nice little pullback. We had it in top 10 this past week. Popped on earnings. Chart Industries, GTLS, reported earnings. We'll see how it closes, of course. Who knows how things go, but it's not my usual thing because it had this huge break. This was sort of near the market bottom last fall. The stock was breaking out of this huge area. It broke down on some huge acquisition. It was down 40% in a week. Numbers are great. Nothing's changed. Everything is the same thing, which doesn't mean the stock was going to work. But eventually it's bottomed out, and now we're seeing kind of this persistent advance, obviously a positive reaction to earnings last night. And this was kind of the first pullback here into the 25-day line. Excuse me. And then a couple more. This is Procore. They have earnings. This has earnings next week, but this is Procore. Some of the, I think I mentioned last week, maybe some of these like late breakouts, like, oh, I'm the 10th software stock to break out. It's like, are you really the leader? But some of these IPOs, they can take a while. So I wasn't like buying the breakout here, but you can kind of see this, came public, got killed. And I've mentioned this before, it's set up. And this is a really nice looking cup with handle, actually, if you're that kind of thing. But a really nice launching pad. Volume dry up, breaks out. I like this. I mean, I like the story. It's kind of like a niche, not niche, but construction-oriented cloud thing. And they seem to be the leader. And so far it's held the breakout. They do have earnings next week. I think what I'm just sort of flagging is, I don't know, like I wouldn't want to buy it on a pullback. I'd almost rather see it strengthen here and then maybe play a pullback after that. But either way, I kind of like how it broke out. And even though a lot of names have kind of sagged, growth names have kind of sagged and gotten a little sloppy here in near term, not a lot, but many, it's just kind of hanging in there and holding the breakout. I think that's kind of meaningful. And last but not least, I'll mention Next Tracker. So my issue with this is, I'm bringing this up and then telling you what my issue is, but my issue with this is solar stocks can't get out of their own way. First Solar had great numbers, gapped up 20 points or whatever today, and as I record this, it's flat, okay? And Enphase, I don't know if you guys remember this one, it's getting killed again on earnings, down another 10% today. So the group just, even though, solar's the future or whatever, the group isn't working. I will say though, Next Tracker is a new name. It did gap on earnings yesterday. Good numbers, good backlog. So just kind of keeping an eye on it. I'm not big on buying stocks in like not terrible, but if you're the Lone Ranger, it's kind of tough because eventually, other stocks are getting downgraded or getting hit on earnings and it affects this stock. But NXT is kind of a newer name in the group. And if the group can hold in there, say if First Solar can rally going forward, maybe this thing can kick into gear. So that's really it. I mean, I'm bullish overall. At the same time, I think it's okay to weed your garden, so to speak, kick out a few laggards, but also to look for, new buys. I think right now what I'm looking for is either stocks that have run that are clearly leaders and maybe they shake out on earnings, but hang out, find support for a week or two above the 50-day or whatever. That could be a buy point, or some name I'm not necessarily watching, or maybe a newer name, say like a Procore or whatever, that gaps on earnings, that sort of thing. So there's still a lot of strength. The trend is up. The odds favor higher prices down the road. Near term, I do think it's a little bit more of a coin flip, whether we see some more shenanigans and some selling on strength in the market. Okay, that's all the time I have for today. As always, thanks for listening. Be sure to come by again next week for another Cabot Weekly Review.